Good morning, everyone, or good afternoon by now. So let me get the panel on the stage here, and we'll get on with the collaborative economy. And we've got a bunch of things to talk around in terms of the new world of fintech and trust and all of that. So let me get them on all together. So we've got Adrian, who's CEO of NorthRow, Eric, CEO of Bankable, Jennifer, CEO of the Toronto Financial Services Alliance, and Liesbeth, who's CEO of Moneyou. Thank you, team. Good stuff. So let's get cracking. So collaborative economy, not particularly new nowadays. Everybody, I think, understands a bunch of horizontal services coming together, a bunch of vertical services plugging into those horizontals. But things have moved around, particularly fintech world. You know, we've come through a cycle over the last 4 or 5 years. Is it competition? Is it collaboration? Is it co-opetition? And of course, top of mind for everyone nowadays is really security, privacy, trust. Who do you trust with your data? Just in the past couple of days, we've had a Facebook incident, which may come as no big surprise to most people, but nevertheless, you know, it sort of started the debate going again. And so financial services has always been an industry that, in theory, you could trust. So heavily regulated. If you look at the Financial Conduct Authority or the sandbox that they built for the RegTech sandbox, very, very strong focus early on consumer safety. In other words, trusted services. But of course, hidden within the ecosystem in financial services, it's a bunch of third parties who work together, as well as the industry collaborating across a number of platforms that provide various pre, post, and trading services. So with all that in mind, what I'm going to do is get the guys to give a good explanation of what they do. So we're going to have a nice introduction from them all to hear their focus, what their firms are up to. And then we'll get into, hopefully, a nice conversation around some of the themes that are important to us all. So we're just literally going to go down the pathway here. So, Adrian, if you wouldn't mind.
Good afternoon, everybody. Thank you. Okay, so I'm Adrian Black, the CEO, founder of NorthRow. And we provide an API to generally regulated clients to do a range of identity, security, compliance, regulatory checks on people, identity documents, and companies to support account opening and account monitoring use cases in sort of client lifecycle management. So that brings in identity now, including facial recognition, et cetera, establishing identity as well as the veracity of documents and related entities for companies, beneficial owners, directors, et cetera. So establishing trust and identity of counterparties that you're dealing with.
Very good. Eric?
Yes. Hello, everyone. I'm Eric Mouilleron, the CEO and founder of Bankable. So Bankable is a platform as a service. So we were among the first one to build a banking as a service solution. So we work with three kinds of clients. We work with large banks, fintechs, and as well corporates. So what we do is we power the back end so they can go to market faster. So what we sell is time to market, and we leverage our processing platform to help companies go to market faster. So we are branded since 2012 as the friendliest fintech to incumbents. So we're not at war with banks. We're at war with the people who provide IT to banks because they provided some horrible software the last 30 years, and we're here to sort that out.
My name is Jennifer Reynolds, and I'm the CEO of Toronto Financial Services Alliance. And we are a public-private partnership with the 3 levels of government in Canada and the financial sector in Canada. So by definition, it's a collaborative group, everyone working together to not just promote the Toronto Financial Centre, but on initiatives to increase the competitiveness and the growth of the industry. And so clearly, fintech is an area that we focus on quite a bit with the industry. I think this dialogue is actually quite interesting because the model in Canada really has always been more of collaboration, this dialogue around who wins, fintechs or the incumbents. There's some of that, but the approach from the beginning, I think, was more about partnerships, as we've seen, and more about, as we see it, what are the platforms going to look like going forward, who's going to be on there, and who are the partners that everyone wants to work with.
So my name is Liesbeth Rigter. I'm CEO of Moneyou. Moneyou is servicing banking products and services to around 500,000 customers in Europe, based in the Netherlands, but our biggest customer base is in Germany. We have been around for some time as a subsidiary of ABN AMRO Bank in the Netherlands, serving retail customers. And actually, well, a year ago, ABN AMRO put us onto their strategic map and said, Moneyou is our challenger bank, like RBS did this morning, I read. That was for us actually a step in going a slightly different route than we had been before, because we have most of our customers are now in savings, and that's when we partnered up with Eric from Bankable to enhance actually our platform. So why did ABN AMRO name us their challenger? Well, first of all, it's about not having this legacy the big banks are facing, and being able to work from there, adding partnerships to our way of working. And the second one is about partnerships. We have had a model actually since the beginning of a network organization that we transformed in a partnerships model, and actually now we're learning and we're building up the capacity to understand what it is to really be collaborative and really build ecosystems together with partners, not having one hierarchy, one bank, for example, in the center, but really working together, and of course also including clients, consumers onto this platform of collaboration.
Very good. So let's talk a little bit more about how you actually get to collaborate, right? So I think you're all predominantly working together already, but you know, it's sort of well known entering into big organizations, if you're sort of white labeling stuff, hard to get through procurement, hard to sort of meet all sorts of different theoretical standards that each organization had. So, you know, you would argue some concerns on reputational risk if they use a third party, all of that. I mean, what sort of experience have you guys had in getting engaged? Has it been slow, difficult? Is it really trust, or is it something a little bit different?
I think it depends on the entity you're talking to. Yeah. It is hard. It's a culture. As a culture, as organisations, I'm sure we're all sitting here, we're very open, we're very collaborative in nature and style. You will find people of that nature in a large bank, but the culture of the bank may not be.
Yes.
So trying to navigate through that is very difficult. So I love partnering with other sort of startups and scale-ups because you have that like-minded nature and culture, and we know that we all have to work together, and there's lots of great systems we can build together. It is a lot harder and it is a lot slower with the larger institutions. So.
Well, in our case, I think we try to identify what we call intrapreneurs, so people who do the same job as what we do. The only difference is their brand is superior than our brand, and their salary is higher than our salary, but they're here to change their company. So we help them to in this transformation. So what we do really is we try to go to market as quick as we can, and what we really do is we marginalize the core banking system. So we are not in a path to say, Mr. Client, why don't we speak in 5 years after you spend $500 million to change your core banking system? Why don't we start right now? Why don't we do a pilot? Why don't we experiment? Why don't we see transaction? Why don't we visualize your business? And that's how we got engaged with Moneyou. I think we were very proud to have been selected, but they were as well organized themselves to cope with us. So we make, of course, an effort because it is extremely difficult to work with any Fortune 100 organization. So it's always a challenge to work with large firms, but this is what we're here for. We have decided to work with large company. Our board is supporting us, and clearly there's no, we're after distribution and banks are after innovation. So it's like a trade-off. In the case of Moneyou, we've learned quite a lot because they are very well organized for partnerships. So I can give an example. When we made procurement, there was one person who was in charge of procurement. Another bank, who's a Fortune 50, a very big bank that I will not mention, we had to manage 20 different teams across the globe. So we were actually project managing our own vendor approval. But it's okay. You know, I mean, it's not that I like it, but if I don't like what I do, I should do something else. I could make pizza. There's no regulation. So we have decided to do that. So we need to do that as much as we can. But it is difficult. But you know, if it was easy, we'll be. You know, it will be different. So there's actually mutual effort, and I think mutual reward as well, because we see things changing. I think we work with clients we like. You know, that's as simple as that. You know, I like to have lunch and dinner with the people I recruit and the people I work with, because it's we're not here to suffer. Yeah, we're here to have a good time.
Yeah, I would make the comment more broadly from, you know, from the Canadian perspective, trust is very high actually with our financial institutions, and you know, we fared much better than others in the financial crisis. And so that cultural shift, though, is happening. It needs to happen where you know, that risk management culture, which is very important in a bank and contributes to that trust with consumers, is now being challenged, and now does need to understand that, you know, it can't take 2, 3, 4 years to get to the solutions that they need today for their customers. So I think we're certainly seeing, you know, is it slow? No doubt it's slow. I think there are efforts certainly to try to create entities within entities. I guess we're seeing a lot in Canada of these, you know, creating digital factories or offshoots where they can create a culture which is more entrepreneurial outside of the big institution. The question, I guess, is how do you bring that eventually inside the institution, so they allow them to move a bit quicker with these new products.
Yeah.
I think, Liesbeth, we met 2 years ago the first time. Yeah.
Yeah.
Then a year later, 1 year ago, the system was live. So we can go fast with banks. There's hope. Yeah, it's not desperate.
No, but I agree with Adrian. It's about culture. So if risk management is important within banks, it surely is not important in all aspects of building up relationships. And we're talking about trust. And what is trust? Trust, I mean, you have to gain trust, right? And you have to win the trust of your customers and your partners. And then it really is about being true in what you do and being truthful about how you communicate about it. And if this is consistent, then you can move faster, then you can be lean, and then you can really work together. And that's always having to come back to it. So the mental models are there, the organization structures are there to make things complicated. And we try to make it lean again. And I think that's one way to do it is like compartmentalize it. So do it in smaller units and try to change from there.
I think
that's what we are doing, at least.
Yeah, I mean that's sort of the nub of the issue, isn't it? Because if you're providing a componentized piece, you know, where does the trust come from, right? So what role do technology standards play in that? What role does regulation play in that? What role does the you know, the ability to be interoperable? So we've got stuff like open banking prompting a lot of thought around that. I mean, what are your thoughts on that? Because, you know, I've had chaired loads of meetings actually around, it's part of the procurement problem. So it's all well and good rocking up as a fintech, but then being somewhat proprietary, not being able to sort of show the rigor of how you built. I think that's going away, broadly speaking. But, you know, any thoughts on these new catalysts really sort of pushing us into a much more mature concept of what trust really means?
I mean, it's a complex environment, and open banking is a good example. I mean, we work with open banking. It's a great initiative, a great organization, and there's a great standard underpinning that. And standards matter. Standards are taken as a proxy of trust in some ways. You know, if there's a body that have come up with a standard, then we trust that they've put some effort into that, and it's a reasonable thing. And things like ISO 27001 as sort of credentials are taken as a proxy for, well, you must have reasonable information security processes, etc. So standards matter, and organizations, credible organizations around them matter. But they're all collaborative. You know, it's back to the collaboration again. So everybody's collaborated to standards, everybody's got to collaborate to adopt them and trust them. So
Well, yeah, I think, especially if you look at banks, there's a lot to be said about trust, because traditionally people trust banks because of the authority they have as an organization, as an instrument, right? And I think the last panel was about blockchain. So what you see is what's going to happen with this authority of the past of banks, and how is the banking industry going to change? And what role this trust then play? I think personally that the role, the given role to be the trustee given to banks, this will disappear, and we all have to learn how to cope with that.
I think there's no doubt there is there would appear to be an opportunity to create shareholder value by actually being operationally secure, right? So I think if you've trusted your bank or you've trusted NHS to keep your data and it's actually just been leaked because of some really poor systems upgrade management, which is not rocket science per se, that I believe starts to have a hit. But then the other side of the coin, which we were discussing in the pre-meeting, is, you know, so who do you trust? At a certain age, you might just keep pressing Facebook forever and trust Facebook, but you know that may well be a folly as well. So what are the services that you think are going to come together? Is this sort of regulatory driven, that you sort of force people to be much more secure, or is it individuals taking ownership of their own data, which I think is the
ownership's key.
Right? Yeah.
You've got, well, sort of self-sovereign digital identities, you know, that we should all have, where we control what goes into an identity wallet, and we control which elements of that are shared with which institutions for which purposes for certain amounts of time, to open an account for something and then withdrawn. That's a great notion to work towards, but there's going to be a lot of collaboration, technology, and also education. I mean, I do get rather horrified at just watching my own kids, you know, rather than sign up for something with a secure username and a unique password which they store, it's now just linked with Facebook. And, you know, and do we trust Facebook? I mean, concerns around trusting Facebook yesterday cost their shareholders, what, 37 billion?
Yeah.
So, you know, who do you trust to hold it? You know, should it be in one place?
Yeah.
You know, Facebook want data to monetize it, period.
Yeah.
That's it.
Jennifer, what's your view?
Well, I think, you know, from the digital identity perspective, the Canadian banks are actually working. They're about to launch a digital identity network. So that's the direction I think that's headed. I think, you know, it's going to play out. Well, it'll be interesting to see how it plays out, right? When we think about some of the risks and some of the, no doubt there will be things like the Facebook breach and others that we'll see happen, and so that's going to test those relationships with those partnerships and that collaboration. As I said earlier, though, I think it will depend on really developing those strong relationships. And you know, Eric, you're talking about really embedding yourself into those big clients, and you got to live with that, right? And live with the restrictions that brings.
I think we integrate, there's one standard and ID that we like, it's Bank ID, Norway, Sweden, in the Nordics. I think it's, we've integrated multiple ID systems, but this one is really cool because it's approved by banks. You can start a new account. It really works. So there's a lot of things. I hope you'll look at those guys as well. But back to Facebook, I think, well, I've got kids on Facebook, unfortunately, or fortunately, I don't know. But what I understood is that they don't trust Facebook for their pictures, so they are not going to trust Facebook for their money, right? So, and I don't think this is very original, but Facebook has an agenda that is clear, and I will not recommend that as the single ID sign-on, but at least not for what we do.
Well, if you look at it from a customer's perspective, of course we can talk about Facebook, and people, well, younger people are more, they will just share what they want to share. But what you see in, be it health, be it in banking, with PSD2, you see that actually the instruments that are being put into place actually gives back the ownership of the data back to the customers. So that's a trend, and well, where this is headed, I'm not sure yet. And well, you can look at Facebook, you can look at WeChat. Maybe more worrisome even. But there's small signals that customers are being able again to make their own data their own and decide for themselves what to do with them. At least that's what's going to happen in banking, of course.
And identity goes beyond individuals as well. So, I mean, just as an SME, a small company, trying to open an account is just an appalling process in many cases.
Yeah.
It is so much fear and regulation and concern and processes. So, taking a lot of the inefficiencies out of that to enable us all to collaborate as businesses and just help oil the wheels of the economy is an important thing. And then you've got the identity of a company. So we want a digital identity of a company. And that includes the people who control that company, so the beneficial owners from a shareholder perspective and the directors who manage the business. So some of the things that we think is important is a sort of client digital passport for commercial organisations that links to the identities of the individual controllers. So that's got to come in too.
Yeah, let's roll up a few thoughts from the audience as questions coming through. So let's explore a little bit more this fintech collaboration piece, because what's really going to tip this into a more urgent situation, right? I mean, just to sort of take an extreme view, so don't take this personally, anybody in the audience, but take an extreme view that says, actually, fintechs are sort of bouncing off the edge, right? There's hundreds out there. They're all great to a large extent. Lots of really good technology. Onboarding's a good example. AML's a good example. But has it really, really changed the stagnant infrastructure, for the want of a better word, in some of these bigger markets? So what's this, collaboration at the coalface with really accelerators within organizations, industry associations? How do we accelerate this change? Is it just something that will naturally move with consumer behavior, or is there something else we can do to sort of jog this on a little bit?
My view is, I think consumer behavior, consumer demand is going to drive this. And so the banks have to respond. And yes, you certainly could argue they respond too slow and they need to move faster. But if you think today, I saw a recent survey actually that showed that just about 85% of banks know that they're going to be partnering with the fintech community and do partner with the fintech community. So that's just part of business now, I think, today. How quickly can you shift giant, huge organizations with, giant bureaucracies and regulatory, that's tougher. But I think as you see businesses start to nibble at the edge of the profit pools, that is going to push things. And so it's easy, certainly you're a big bank, we were talking about this earlier, you're making billions of dollars, do you have to care today and do you have to move quickly? I would argue, I think people now understand they have to move more quickly.
There is more competition for financial services products. Open banking is going to make it easier for people to compare products and find the ones that they want. There will therefore be more accounts being opened. More of those people want to do that on a mobile device. They'll need to do it because there aren't branches anymore to go and visit. So there's going to be more accounts being opened. More of them are going to be done on mobile devices. Consumers have a higher expectation of the speed it will take to open these accounts and go through these processes. So there has to be change. The market will drive it. And so some of the new challenger banks, some of the great collaborations here, it's a nice, swift process to open an account. People the incumbents may be slow now, and they've got the challenges of large legacy systems, which they've inherited and aren't easy to change. We need to be sympathetic to a degree, but they'll have to, or else their market share will just erode over time through to consumer demand, simple as that.
Exactly. Yeah. I mean, the fintechs are there. That's the curious ones out there, right? So we all don't know what the banking industry is going to develop into. And at least a role for fintech is very important, is to try and start to find out. And I really think that all these curious ones, all this searching, this pioneering, this exploring, will in the end also lead to different business models. And then, the market is open, because banks have to change them.
Yeah, do you have any views on, you guys have gone through a whole bunch of growth, obviously, in the last few years. So there's the banks, on the one hand, you can look at all the big banks, whatever the fines have been globally for breach of some process. Doesn't seem to have had what you might call a trust and a brand hit yet, to a large degree. Most of those big banks have got in-house innovation accelerators. perhaps they're not as effective as external other accelerators. But I mean, what's again? Let's explore the catalyst of the next piece. And I understand it's you know, there's a generic growth thing going on here and adoption, but you know, should we be concerned around protection activity from the big banks? You know, they clearly want to innovate. History of innovation has been take some ideas, go back in-house and sort of really slow that back down again. Are we in danger of seeing that here as well, do you think?
It's always a risk, but I mean, it's such a, the rate of technology change is enormous. I mean, you know, Eric here, he can power a bank, you know, the technology platform. So it's, it used to be pretty damn hard to set up a bank and the infrastructure. It's not so hard now. Right. So there's just been a fundamental shift.
It's not very easy.
Well, sorry, you told me it's dead simple, but then no. But I mean, there's a market dynamic is changing. You know, it is easier to introduce new competitive financial services products. So.
Yeah, it couldn't be done before.
Yeah.
And it's fundamentally inefficient when you think about these giant financial institutions who are investing year after year in these legacy systems, which you know offer them nothing. I'm sure that CEOs would far rather be investing in technology that they thought was actually leading to the future, and not, you know, doubling down over and over on these legacy systems.
Well, 85% of the budget goes to legacy system. But it's not that negative. I'm relatively positive on legacy system because that shows history. If you have no history, you have no legacy system. So there's a value with history, but I think it's good not to remain idle, you know, to act. And I think we take legacy into account, but we are not you know, religious about changing the whole thing, and we're going to the white paper. There's no white paper. You work with a company that has history, you adapt, or you don't stay. You know, it's as simple as that. So, on the on the legacy, I think there's a lot we can say. But I think as well on the management of banks, that's where there are issues right now. They are near retirement, so it's not when you're 3 years away from retirement that you're going to innovate. You're going to make sure that your package is the best you can in the next 3 years. So I went to a conference like 2 years ago, and everyone in the room was, you know, quite old. So I said, guys, I mean, I understand you are trying to protect your job, but you are not going to innovate. I would do the same. You know, but so, and then the management is one thing, and then the big risk is underneath the management. It's not the top. There's some great guys who are CEOs of banks in various countries, but underneath, sometimes there's an old guard, and those guys, they build the legacy system, and they love it.
Yeah, it's interesting. I was with a bank executive the other day, and he made the comment that he doesn't want to hire anyone who's over 40, just for that reason. So, yeah, all right to the young people.
Damn.
So let's, well, on that theme then, let's talk about behavior then, sort of moving this on. So you can argue a certain generation, younger generation, would want to just take care of all this stuff. They might know the technology better, and so they don't really care about trust. They'll make their own assessment of whatever is in front of them. You know, what difference, we haven't really mentioned distributed ledger. So newer technologies, not the panacea I think that people are expecting, but nevertheless some other new stuff coming. How do you think that helps? Is that making it more complicated with things, or do you guys end up providing a service and what's under the covers is under the covers, people make an assessment?
No, well, maybe I'd like to make a bridge to what you were saying about this company hiring only people under 40. What we are doing is we're developing with customers under 40. Because we like our customers all the same, but if you really want to develop and you really want to innovate, you need the people under 40. And why is that? That's because they cannot imagine a world without the internet. And actually, people over 40, they're just too nice for us. I mean, they understand that you can email something, or they are not severe enough in their feedback.
Well, I employ multiple millennials. I like millennials. I mean, I've got nothing against them. They show me things I could not imagine myself, so I think it's pretty good. I think it's about diversity. Diversity is good for business. So millennials is not a threat. I see that as a fantastic opportunities to catch, in fact, other millennials clients, because there's all clients are not 50 plus. There's various age groups.
Yeah.
Yeah, I think things are changing dramatically on that front. Just, I read the other day that 60% of jobs that my children are going to hold, they're going to be working in about 10 years, don't even exist today. So that just changes the whole work landscape so much more quickly than what we've seen in the past, where the types of roles in banks, for instance, have been really pretty similar for a long, long time. Not so much anymore, and certainly not going forward, particularly with AI and other technologies like that.
Yeah.
The technologies do matter. I mean, AI is just coming. So back to the remote account opening, we're just leveraging AI technologies. You need voice biometrics on that as well, because AI on a face isn't just enough. Blockchain, well, digital ledgers. If we're looking at corporates, want to understand the provenance of what data have you used to verify this identity, or say they're not on a sanctions list or whatever. So people want to know the provenance of the data. And if also when you get to the state of, you've got a client digital passport or a self-sovereign passport, then what's the immutability that has that not been tampered with? So that's where DLT might come in, but it's not the panacea that it's been pandered around.
No. Excellent. On that positive note, we seem to be out of time. So thank you all for listening, and thank you, Adrian, Eric, Jennifer, and Liesbeth. Enjoy your lunch.
Thank you. Thank you.